afternoon, ladies and gentlemen. Welcome one and all to this afternoon's Markets Now event. Hope you're doing grand today. We've just had a ton of thunder here. Lightning all sorts just passed us by. It's all gone completely quiet now, so yeah, thinking we've probably been done with it for today. But yeah, the skies are super dark out there. Crazy storm. Good afternoon to you, Ryan. Good to see you. Hello there, Bacon Do. Good afternoon. Hello there, Matthew. Good to see you, mates. And good to see H&C as well. We've got H&C in the house. Hello. Good to see you all. Hope you're all doing well today. So, first of all, this morning was brilliant. Had a great morning this morning. DAX landed a beautiful 1 to 2.78. Rejection trade as well was really nice from big liquidity, so you could have doubled your money quite easily on that one. I also landed the EU50 long, which was another really nice trade for a 1 to 2.2. We did come all the way up to the high up there at 61.13. Back down for the retest. It's kind of ranged since that point in time because the market had done, kind of been and gone of the European volume. But nevertheless, it was a very, very strong start to the day this morning. And it was nice to see, especially after the slower pace of yesterday, let's say. The NAS 100 was an unfortunate one. We only got, in the end, we only got this triggering at around 4:30 in the afternoon, and that was short-lived. It did die a death very quickly. The second attempt worked out nicely, but again, at that point in time, it was 5:30. So, that's dinner time. There's no way. And then in the evening, we got the big sell-off and the big corrective thereafter. We had some more news on the US and Iran geopolitics last night, overnight, and very early hours of this morning. And the only thing that did was make markets more uncertain than confident at the moment, which is why we then saw a little bit of a flip out between energy markets. We saw natural gas and the UK Brent, US crude, and so on and so forth. They all had a bit of a bump. But as it happens today, we've actually continued trading lower. And we're supported at the moment by liquidity here. So the trade ideas that we did have in place yesterday, none of them need to be changed necessarily, because we can just drag them along to the to the right-hand side. So we did, this is what I was talking about yesterday. Had this big push to the upside, and then all the way overnight, we had just had the big sell-off all the way back down again. Same with crude and natural gas as well. Although natural gas is actually just forming a lower low. So I would anticipate this to continue trading all the way back down to 2.9 at this rate. Why not is the question. This area in here is the liquidity point. It's the point of inflection. Price has been using it for some time now. We've got the breaker structure underneath there. I tell you what, team, we get a break close and a retest of this one. This is not a bad little trade idea, actually. We do need the retest. We definitely need to see the retest. But if we do get the retest, then the continuation from wherever this begins is not bad at all. Looking for the order to be placed at the beginning of the price action pullback. So, for example, in this instance, it would be about there. You'd have your stop loss at around 305, 306. That's going to yield you a 1 to 2.5. That's not bad. That is not bad at all. Not as nice as our trade idea from last week, but then again, it's got the exact same risk-reward ratio. So actually, maybe it's not too far away from that at all. You do run more of a risk of this one being stopped out, but not by a huge amount. This does look like it really wants to sink though, doesn't it? It really does. Big push at the moment. But it is the commodities open in the US, so we are going to see some increased levels of trading volume in this at the moment, over and above what we would see over the course of the next couple of hours. So maybe it would be prudent just to let the next couple of hours kind of go by the wayside. Look at where natural gas lands. And so long as it lands at around 302, 303, and we start to see the buyback, that's going to be good for business. And then this evening or / this afternoon, we'll be able to jump in and go for the short back down to 2.9. Which I, for one, would be very pleased with. That'd be very nice. I'm going to post that out Right, let's have a look at this. Hey Max, got a question about this you posted earlier. When I looked at these wicks, it seems like this is a strong rejection zone. Wondering why you drew the zone above these wicks. Let's have a look. Yeah, it certainly is. I will tell you immediately why that is. So, if we look at these areas in here on the EU50, we've got major point there, here, here, and here. Now, these areas across the tops here, let me get another zone. You could have one there, for example, and then another one up there, maybe something along the lines of that. But they're very difficult to plot, of course, because there's no synergy between the highs, right? This one is different than this one, which is different than this one, which is also all of them different than this one. So none of them match up. So we're not getting that kind of repeat test of the structure, are we? Now, looking at these here, all of these are above the trading margin that I would have particularly, I suppose, wanted to go for in the optimistic view. But they are the major points of inflection in this chart. Okay, so this, now let's just file this down here for a moment. So then we've got this one, this one, this one, this one, and this one, which has happened after the fact, to be fair, but that's fine. So these little ones, they have had some relatively strong moves, no doubt about it. Some very strong moves. But overall, they haven't really affected the overall direction in price. Only once did they do this, and this was in this move here. This is the only one out of every time that it's been up there. These are not the primary point of inflection. And so therefore, when we're looking at the bias, and we're having our bias, and we say to ourselves, right, what is the power and weight of, say, let me just highlight these now for a second. Let's say of this zone, which there is no doubt is going to be a breaker structure point for a short. Wait, hang on a minute, where the hell's that gone? So we've got this zone in here, which is a nice breaker structure point for a short. And what is the power of this versus the power of one of these highs? I would say pretty much nil. There's no competition between the two. Because the size of the moves that we've had as a result of reaching one of these highs in comparison to one of these ones is minimal. There's minimal market fallout as a result of hitting one of these areas in comparison to the size of the moves that we've had from one of these areas. Okay, so if we then, let's just scrap all of this for a minute, start with a fresh chart. We're looking at extreme highs and extreme lows. Got two extreme lows up there. And then the extreme highs, when we plot the chart out, would be there. Right, if we went back even further in time, we would continue seeing the same kind of thing. And the further and further back we go, we would see less and less of a synergy between them all. The interesting thing is, when we get back to this area in here, this 1, 2, and 3, this 1, 2, and 3 is slap bang in the middle of all those red circles. So if I draw a zone around there, let's say, for example, and bring that in, maybe just a touch lower, let's put that about there. It needs to be slightly lower, to be honest, because of these highs in here as well, but I don't want to stretch it out too much. So we'll leave it like that. We've then got the median. So then if I bring this up to the highs there, and then this one back down to the lows, we then have what we are always trying to build in a chart. Our high, our low, the premium, the discount, and the median of the range. The only difference with the EU50 is that it looks pretty crap. And it looks pretty crap because we haven't got the highs coming up to an equal point. The highs are stalling at all these random points in the levels. It doesn't really make us doesn't really make a nice chart. Doesn't really make a nice setup. So does that kind of make sense? I mean, all it comes down to in a nutshell is priority. That's all it comes down to in a nutshell. At the end of the day, the zone that matches this is not powerful enough to overcome these, and so therefore we don't use it. It is a minor zone, buddy. Yeah, it's what we would use for a break of structure if we were taking a short. That's exactly what it is. Yeah, no worries. No worries at all. So that's that. We don't have a pending order in there anymore, so we can remove that short, and we won't be going for it either. But not too bad. Now let's have a look at those US indices then for this afternoon. Now based on... Yeah, based on this price action, let's so we could certainly run that level through there, couldn't we? So that would be the breaker structure for the short. It's the same exact setup as yesterday. Again, I swear, that's a bit of a pattern this week. But it is nevertheless, it is the exact same trade idea that we were looking at yesterday. So US 30 Dow Jones short, there's no reason to change it. It's the exact same setup. Price is trading the exact same point it was yesterday as well. Wow. I don't know if you guys heard that. The thunder is absolutely cracking open the sky. It's mental out there. But yes, same trade idea as yesterday for the short. We have the possibility of a long. That's going to be via the breaker structure of this area in here. And then we'll be looking for that TP at the previous high, which it just missed. But today we're going to be bringing our target down ever so slightly, just to make sure that if we do jump in for the long, it is going to be a success. Stop loss at about there for 1 to 2.7, and yeah, we should be happy with that. Or 1 to 2.5. 1 to 2.5. That'd be better. So that's a download. NAS 100. Yeah, there's no reason to do anything at all to this. I'm just going to play it real safe. Exact same margins as yesterday. All-time high. Breaker structure entry. It's going to be very, very straightforward. Entry, target, and the stop loss, which is going to be at around 30.52. We then have the opportunity for a break of structure entry, which is... Oh, actually, we can just recycle that, can't we? Love recycling a zone, so we can just bring that across. This becomes the no man's land. We have the entry, the target, and the stop loss tucked in behind there at 1 to 2.83. Spot on. The S&P 500 at this point is redundant, and actually looking at where it's trading, it is the least favorable setup. So I'm not gonna throw that out there. It'll just, too many options causes too many problems. So we'll leave that for today. Looking down at our metal markets at the moment, gold still waiting on the bite point on this one. It's still kind of trading in the space of nowhere. Silver at this point in time is still very much the same thing. Very range bound, very choppy, no consistency. So not much to say on that one. The Aussie CAD trade idea, ladies and gents, is very disappointing. So we got a beautiful tag into it yesterday after I said to leave it, let it go, and yesterday, sorry, this morning at 8 a.m. Let it go and do its thing. There's no reason to get rid of the trade. From the space of 8 a.m. until literally a couple hours later, it rallied to almost target profit at 99.51, and then came all the way back down to break even to finally retest the point in which it broke free from for the trade in the first place. Very frustrating, but there's nothing we can do about it. The trade's open. It's not, it's going to do what it's going to do. There's no reason to be any more concerned about it. But yeah, like I said, guys, it's just one of those frustrating ones. We either now have to wait for it to happen all over again, or it goes to stop loss. Yeah, and that's about it. Let's just double check that Euro NZD as well, because you will be very, very happy to know that our weekly Euro NZD call long went and smashed through its target profit at about 1:45 in the morning. So that one was really nice as well for the late entry opportunity. Really, really nice for a 1 to 2.91 there. So hopefully you did make the most of that market report idea on that front. I'm hopeful that natural gas, so natural gas has already started the price action pullback now. Remember that this now becomes the entry. So what we'll do is we'll bring that entry down to around 3. The stop loss for this one, I mean, you guys are going to have to take a view on it because we don't know where the market's going to end up going. I would probably be comfortable leaving my stop at around 305, which makes the trade's overall risk rewarded at 2.5 to 1. And that is not a problem at all either. Now, ladies and gents, I feel like I'm about to be swept away here at the UTC Home Office. I'm probably going to have to get one of those blow-up dinghies and make my way over to my son's school to do the school run. At this rate, it's completely mental out there. So before we get any sort of kind of crazy power cut or anything, I will wrap things up there. If you have any questions at all, is there anything else that I can help with, please feel free to fire out your questions or whatever it may be into the chat, and I will be picking that up ASAP. If there's anything else that you would like to know via our markets this afternoon, or the geopolitical situation between the US and Iran, which I'm plugged into, unfortunately, for my own mental health, too much at the moment, I would say. But I will be able to give you answers, and I will be able to give you them quickly. So if there is anything that you would like, please feel free to know. And yeah, have a good one. So take care, team. Have a great afternoon. Let me know how it goes out there. And yeah, we'll speak soon. Thanks a lot. Bye-bye.